All right. Welcome everyone to the Thursday Elite Zoom training. Today I had a special request from one of our agents, and she wanted to do a policy review for her current clients that has been with her for at least 1 year. And it's a policy review is probably one of the most important part of the business because once you build your book of business, there is opportunities there that you can go back to and help them with other products on top of what you helped them before. And this way, leads are great, right? Leads are great for you to generate the book of business, but after a while, you can always go back and without spending more money on leads, you can also get more clients and get referrals, get more policies in place for the client, and it all starts from a good annual policy review. And the agent's question was, what do you say when you first call these clients, right? First thing I did when I'm doing a annual policy review, and it doesn't have to be annual necessarily. Let's just say it's been about 2 years and you didn't call them after 1 year, it's okay. It's really about just trying to service and take care of the clients. So when I call them, let's just say their names are John and Mary. I'm gonna say, hey, John and Mary, this is Sieun Kim. I helped you with your mortgage protection about 12 months ago. And at that time, I helped you with a plan that fits your family's needs. Now it's been a year, and I wanted to just give you a call and see if anything has changed in your family, in your finances, and wanted to make sure that you have the best program for your family. Okay. And how's your family doing in general, right? So you're just asking how they're doing. And that's a really good way to start because if you get straight to the business, I would say it's not as smooth of a transition. So what I do is I just say, "Hey, how are you doing? And how's your family doing?" And that's a really good way for you to talk to the client. And some clients don't might not remember you, even though it's been like 12 months, 24 months. Some clients would not remember you quite well. So it's good to give them a reminder so they don't think it's somebody else that is reaching out to them to just sell them something. And if you have maybe their family members' names, say, hey, John, how's Mary doing? Right? How's your health? And that's another great question to ask the client. And there's a couple of reasons I do that. One of the reasons I ask about their health is making sure that their family's okay, since we're in the life insurance and living benefits business. But number two, when you're asking about their health, you're also seeing that if their health is still good to potentially qualify for other products. Okay. Because if their health has drastically changed, then there might not be as many opportunities to give them a new policy. Does that make sense? So when I ask them about health and they say, oh, our family's doing great, the health is good, then I'm saying, wow, well, thank God, that's incredible. Um, and during the COVID time, what I did was, oh, how's your family? I know there's been a lot of things happening. Is your family okay? And some families actually lost their family member. So I say, oh, I'm so sorry to hear that. And what I'm trying to do is just making sure that they feel also appreciated as a client, right? And then when I ask about their health, they say their health is good. Okay, perfect. What I wanted to do is I just wanted to set up a call for a quick annual policy review. Would you and Mary be available sometime tomorrow around this and this time, or the next day, this time to this time, and give them about two different time slots? You don't want to give them like a too big of an availability, right? If you seem like your schedule is wide open for the client at all times, it seems like you're not a busy agent, right? So you say, hey, I have some time tomorrow around 2 to 3 p.m., or I have 4 to 5 p.m. on Thursday. Which one would work better for you? And what I'm doing here is I just did a quick introduction again of myself since it's been about a year or 2 years. And I'm going back to them and doing a policy review, but setting up a proper appointment to really go over their benefits and also help them understand what they got a few years back. Okay. And what I let the client know is, yeah, the reason why the annual policy review is important, making sure that all your family's needs are taken care of with this policy. And I want to make sure I can go over the benefits again so you can be reminded of all the benefits that you got from this policy when you signed up. And, talking about the coverage amount. Let's just say it's the death benefit, the living benefits, if there's cash value, and why they got this policy for in the first place. Those are the things that I'm going to be discussing with the client. Okay. And once you talk to them and set up the appointment, now our focus is you ask about their health and they said their health has not changed, then that is a good sign. If they got a term policy or an IUL with you in the past, that means they still have a really good chance to potentially get a better program with more benefits or a better pricing. And so I'll just give you an example. This was a client of mine pretty recently. Client had a term policy with Mutual of Omaha. And I think client had it for about 3 years or so. And I think it was like a 15-year term. So at this point, client has about 12 years left on their policy. But since the client is only in their 50s, I was like, you know what? At that time, when I showed them the three options, the client ended up going with a 15-year term, which was the most affordable plan. Okay. And then, but at the same time, I showed them a 20-year term and a 30-year term back then. But they went with the 15-year term just because of their budget. So what I'm gonna do is in my head, I'm already thinking, the client has only 12 years left. What if I can show them another plan that resets their 15 years for the same price? That means the client will be able to get 3 more years of insurance for a same price or better price. And it doesn't always have to be a better price. It might be a better benefit. But I try to enhance what the client has, right? Because I don't want to give the client a worse policy than what they have, then that's not going to be doing a good for the client, right? So in this case, we start talking about this, and I told them that since the client is now 50, I think it was 52 years old versus I think the client was like 50 or 49 years old back then. So I told them that, this is an age that is really good to look into a permanent coverage, right? And what's great about selling Mutual of Omaha policy 3 years ago is that those are convertible into a Mutual of Omaha IUL Express, okay? Or a Mutual of Omaha Living Promise. So then before I go into the actual meeting, after my initial call to set up that annual policy review, I'm already doing my homework and seeing what kind of programs that I could potentially show the client, right? And in this case, when I priced out the Mutual of Omaha IUL, and then I looked at the Americo IUL, Americo IUL was a little cheaper. I think it was around $15 to $20 a month cheaper. So then what I did was obviously clients who had Mutual of Omaha policy for 3 years, they might have that kind of connection to them. They might feel like, oh, we're covered with Mutual of Omaha. But then I don't want the client to feel like, oh, I'm just switching the client over to just a random company. So when I'm doing the policy review, this is what it looks like. If the policy review was about 20 minutes or 15 to 20 minutes, then my first 5 minutes is gonna be just going to explain what the client has in terms of the coverage. So John has this policy. So let's just say John has a Mutual of Omaha policy, Term Life Express for 15 years, and the coverage was for $250,000. Okay. And then the wife, Mary, has a Mutual of Omaha Term Life Express policy for 15 years for 250,000. Then I'm going to go ahead and let the client know that the company's Mutual of Omaha, the product name is Term Life Express, and at the time they got a 15-year locked-in policy because that was the most affordable plan out of the three. And the premium amount and the coverage amount is $250,000. Plus, I'm going to talk about the living benefits as well. So at this point, I'm going to talk about this policy is not only if you passed away, John and Mary, but also if you were to have a critical illness, chronic illness, or terminal illness, this will pay out up to 80% of the death benefit to you while you're alive. So when I'm talking about the critical illness benefit, I'm going to talk about the critical illness benefit covers in case you had a heart attack, if you had a stroke, if you had cancer, non-terminal cancer, if you had Alzheimer's, if you have dementia, major organ failure like kidney failure, congestive heart failure, things like that, Lou Gehrig's disease. If you were to experience any of those things, then you have access up to 80% of the death benefit. And sometimes clients remember it, sometimes clients don't remember it at all. And either way, they appreciate me just reaching out and just to give them a review, right? And not treating them as just a sale, right? So once I do that, I also let them know that this also has a conversion options available. If it's a term policy that has a conversion option, then I let them know. So John and Mary, these term policies have something called a guaranteed conversion. And what's amazing about these policies that in case your health has changed and you can't get insurance anymore because of heart attack, stroke, cancer, or other health issues, major health issues, they cannot ask you any health questions and have to convert this into a permanent coverage with cash value. And this coverage, once it's converted, is for the rest of your life and you never lose the coverage. So even if the client knew nothing about that, do you think that that will intrigue the client somewhat of what that could look like for them? Because I just let them know that they had a 15-year term policy and now they only have 12 years left because they had it for 3 years. So this is kind of the conversation that I'm having with them. I'm informing the client of what they have, but at the same time, I'm looking for opportunities to potentially upgrade or replace what the client has. And to me, if I were to do 10 policy reviews, about 3 to 5 clients, I'm gonna be able to do something with. So it's not 100% where you're gonna be able to convert all those clients into another policy. I would say good 3 to 5. So 30 to 50% of those clients, I'm gonna be able to help them to either upgrade or replace. Now, now I explained, let's just say I already explained John and Mary's benefits. And at this point, this is something that I say. So John and Mary, you said that your health is still, very good. When you say your health is still very good, was there any changes in your medications, or did you have any other things medically that was maybe put into your record in the last few years? And let's just say a client said, for John, there was nothing. His health is exactly the same. The medication is exactly the same. Then that means that if the client qualified for Mutual of Omaha Term Life Express 3 years ago and his health has not changed, what does that mean? That means most likely he can be approved for other policies as well, such as Americo term policies or Americo IUL, or maybe the American Amicable IUL, or the terms from Legal in General. Legal in General has a lot more affordable pricing compared to the Term Life Express, right? And back then, Legal in General really didn't offer that yet. So that's another great way. You don't always have to convert it into an IUL. Maybe it's just a better term with a longer coverage or a better pricing, whatever that might look like. I can offer that to the client. So I'm so glad to hear, John and Mary, that you still have great health. And since you have great health, you might have an opportunity to get a better better program with better protection and better pricing than what you currently have. I'm gonna just check and see if you could qualify for those things. Okay, give me 1 second. And what I'm doing is I'm gonna go ahead and I'm already prepared, by the way. I already prepared overnight after my initial dial to set up the annual policy review. I already have 2 to 3 options written down, but I'm just doing a more smoother transition so the client doesn't feel like I'm just there to sell them. Does that make sense? Because what if you just call the client and say, "Hey, I have a better program for you," it already feels like a sale. So the policy review is such a smooth way for your transitioning from a client in the past that you helped them with a few years ago into giving them the annual policy review, which is very important because a lot of clients, you'll be surprised how many clients have no idea what they have, even though they got it for few years ago and they've been paying 100, $200 a month. Sometimes they have no idea what they got. So you're doing the client a customer service of giving them the breakdown of what they got. And secondly, they're going to find some things that they don't remember from 2 years ago when I explained it. So I'm going to go ahead and let the client know about all the benefits. And while I'm doing that, at the end, I'm also now talking about their health again. You said that your health is still really good, John. That's amazing. Congratulations. So has medications changed at all in the last few years? Have you had any other hospital visits, surgeries? No? Wow. And I congratulate them. It makes them feel good. And it's true. How many clients you know that develop illnesses suddenly, they pass away? Those things happen all the time now. So I'm congratulating them and letting them know that, hey, if your health is that good, I'm a broker, right? I represent top 50 insurance company in the United States. And my job is to make sure that you're getting the best coverage for the best deal. And this is what's great about being a brokerage, John and Mary. When it comes to insurance coverage, the insurance companies come out with better programs with better pricing and better benefits to earn your business. So you might be able to take advantage of that and get more coverage or more benefits for a better pricing. Would you like to see if you can qualify for that? Right? And who wouldn't want to see that if you can get a better deal for their family, right? So that's a great way for you to transition from a policy review into potentially giving them a better plan. Okay. And once I do that transition, I say, you know what? Looking at your health and age now, this program looks amazing. Do you remember I got you a Mutual of Omaha Term Life Express policy because that was the most affordable program at the time? That 15-year plan that you have only 12 years left, I can reset that clock 15 years so you get 3 more years of coverage, and I can save you about $9 a month per person, $18 a month. That's about how much? That's almost a little over $200 a month or so, $200 a year or so that you're saving. And let's see if you can even qualify. If you don't qualify, and this is very important, guys, this is super important. The takeaway. If you give them everything and you're like, oh, you're going to qualify, no, you don't do that. You have to do the takeaway. And these are the very, very little things that makes a regular agent into a top producer. Closing techniques. Takeaway. What is the biggest takeaway that you can do is, John and Mary, this program is incredible because it will save you money and it will give you 3 years or more protection, but the only catch is that you still have to qualify for this plan. If you didn't qualify for this new program, John and Mary, your program is still great. Okay. But if you did qualify for the new plan, then I want to help you upgrade to a better program for a better pricing. How does that sound? So I'm not just saying, oh, you're going to qualify. I'm not giving them everything. I say, hey, in case you didn't qualify, then your plan is great, then we're just going to stay exactly where we are. But if I can find you a better plan or better benefits or better pricing, then I'm going to help you get upgrade to a better plan with a better pricing. How does that sound? Who wouldn't want that? So letting them know their policy is great, but there might be an opportunity to make it even greater. Okay. And at that point, I already prepare some options and I say, okay, perfect. Um, I have your application pulled up here from 2 years ago. Has your address changed? And I'm just going to confirm everything. Why is this important, guys? That's why it's very important to download the PDF file of the application because if you don't do that, then when the client wants to go ahead and do the new one, and you have to ask for their social, date of birth, it's a hassle. Do people like hassle? No, they do not. I'm already their representative. I'm already their agent. I should already know their information. They provided to you before, and you should already have it in a secure folder. So I pull up that PDF file that I did 3 years ago with Mutual of Omaha Term Life Express, and I'm just verifying them verbally. And if this is another trick that I have is when you're using your computer, if you have a split screen capacity on your laptop, I put the old PDF file on the left side, and then I have the other half on this side, the e-app. And I'm just transcribing the information into that. But I'm verbally confirming with the client, hey, your address is still 2700 Seagulls Avenue, Las Vegas, Nevada, 89127. Is that correct? Perfect. And your date of birth is 8/27/1967. Is that correct? Perfect. So do you see what I'm doing? Your social is this. Is that correct? And guess what? If you already have all their information, they don't have to do much. They just have to confirm it with you and verify with you, and that's it. So this process is super easy, and clients have a chance to potentially get a better deal. So usually for me, this is way easier of a sale to sell a client that you already have sold versus selling a new person. There's a statistics out there, right? Once they become a client of yours, to go back and get them another product is much easier than getting a new client in. So that's why when we say this business is tough, is because the first 12 to 24 months, agents are building their book of business, trying to generate that clientele. And then when you do that and you have a couple of hundred clients, there's a lot of opportunities for you to have more profit than just for the money that you're spending. Because let's just say you spend $500 every week on leads to generate 3 to 5 clients a week. Okay, let's just say hypothetically. But once you generate a couple hundred clients, now you don't have to spend the lead, but you can just give them a call back and do an annual policy review. And out of 10, you can upgrade or replace 3 to 5 clients. Then what did that just do to your profitability of your business? Maybe your first year or 2 year of your business, your profitability was 3 to 5 times X. But on the third year now, your profitability might be 5 to 10 times because you're spending less money into investment into leads. You're actually getting more of the benefits from your existing clients. So those are just extra clients on top of your lead clients. So when we say this business snowballs, it's true. First few years, you're really trying to generate the number of clients to 100, 200, 300 clients plus. And while you're keep doing leads, I don't recommend agents to stop doing leads until you have about 1,000 clients or more. Okay. I have 1,700 clients. And at this point, I just don't have the time to even really call every one of them to do an annual policy review because I'm also busy helping agents, right? But when I was an agent in the field, I was still doing 20 to 30 A leads, about $1,200 a week on leads. And I was still following up with some clients that had some opportunity for an upgrade or a replacement, right? But instead of maybe doing 1,200 a week, $1,200 a week, I might be doing $700, $800 a week because I can also generate more profit from my existing book of business, so I don't have to spend as much money on leads to get the same results, same profitability. Okay. So that's the hardest part of this business in the first few years is generating the clients. Okay. And let's talk about not just replacing, but introducing them to other things. So first one we talked about was replacement. Also, the other thing was upgrading what they have, or a conversion into an IUL if they have a policy that is convertible. But there's also other opportunities. Two, one is referrals. You are giving them a call. You just did an amazing job as an agent to do a policy review. Most agents don't do annual policy reviews. So you're standing out already to that. Wow. Most agents, they either quit their job after a few years and you never hear back from them and you can never reach them again, right? Or just the agent doesn't call them. So for you to give them a call and do a thorough annual policy review, already the client have a lot more trust in you, correct? And then now at this point, you just went over all the policy review and you helped them potentially upgrade their policy. And let's just say we did. When is the perfect time to ask for a referral? Hey, John and Mary, I'm so happy that I was able to give you a better plan with better protection for a better price. Congratulations. And this is why it's so important to work with somebody that is actually a broker so that you can get the best program and also find the best price for the clients. And I wanted to see if you have any family member or friends that you might think that they need some coverage or protection. I would love to see if they need some protection in place. And if they can qualify things, I also give referral, like a gift card as well, and just maybe like a 25, $50 gift card, whatever that might be, and let them know that if you introduce me to them and if they get a policy with me, I even give them a little referral gift of some sort. Maybe it's a gift card, maybe like a MasterCard. The other opportunity there is potentially retirement, debt-free life, tax-free retirement, final expense, children's policy, so many. So it's not always about their existing policy that you help them with, but that's the way back into back. This is just a way for you to go back to the client with this. But there's tons of other opportunities. And you say, hey, John and Mary, let me ask you this. Are you 100% confident that you're going to have a great retirement, or do you have some doubt? It's a great way. You already talked about their existing policy. You already build more credibility, and you're just asking them, hey, John and Mary, are you 100% confident that you're going to have a great retirement, or do you have some doubts? And if they say, oh, I think we have some doubts, 90% plus clients say that. Not many clients will say, I'm 100% confident with my retirement. Very, very, very rarely that happens. So when they answer that way, I say, oh, okay, Don Marion, why? And this is very important. Why is that? Why are you not feeling 100% confident with your retirement? They say, oh, the government, the interest rate, the inflation, cost of living things, or we didn't put too much money aside for retirement yet, and we're in our 50s already. Whatever they're telling you, you're kind of absorbing that. You can write some of these down. Two ways to go about this. If you are a subject matter expert already, so you already know how to do annuities, IUL, debt-free life, then you can actually let them know that you also help clients with other things, such as protecting their retirement on a market downturn, help them get out of debt, pay off their home early. Because a lot of the times, people cannot retire because they still have a mortgage payment that is substantial. And let's just say when they retire, their income is going to be $4,000, $5,000 combined, but their mortgage is $4,000. How can they live? Just mortgage is 4,000 itself, insurance, car payment, all this stuff. And their expenditure is almost $6,000. And with a retirement income of $5,000 combined, they'll be minus every month. So we are finding a way to see what are the other areas of their life that we can help them improve. Okay. And when you are not a subject matter expert and you're pretty new to this, and but you learned about the F5 reset and you wanted a subject matter expert to help you with this, then you say, John and Mary, I totally understand. And it's so sad that so many Americans are just struggling to retire because of high debt, lower income, high cost of living, and the market downturns. Do you remember back in 2008 what happened? Some of the clients lost $500,000. They lost 70% of all their retirement assets. Some people jump off their building because they lost so much money and they had no hope. It's really, really sad. And what we do here is we actually have a separate department that specializes in these programs to help you have a better retirement, also able to pay off your debts faster and other things, right? And then I'm just telling you, right? And then at this point, I say there's a subject matter expert I'll love to connect you with, and it would only take about 15 minutes, but I think it'll be totally worth your time because this could help you retire better with better income. This could help you protect what you already have in terms of assets. And also, we could help you retire better by just helping you to pay off your home early and other debts. How does that sound? So, what am I doing? I'm doing an F5 reset, and then I can plug them into an SME. So if you have an SME in your base shop, in your agency, I'll try to always stay with your agency owner and the base shop first. Okay. And then if not, then you go to the master agency. And then there's plenty of people in the master agency and symmetry. So, but once you do that, what you're doing is think about how much of an impact you're making to this family. First, you call them up, you ask them how they're doing, you set up an annual policy review, you went over all the benefits and features and what they got 2 years ago, and I'm educating the client on what they have. And then I asked about how their health is. They said their health is good. No medications has changed. Sometimes it has changed, whatever information that we gather. Then I say, oh, you know what? I might actually have a better program for you with a better pricing and save you some money with better coverage. And then let me check it out for you. So now I'm into showing them the best plan, close that, help them with that. Now you have opportunity for referrals. You have opportunity for protecting their retirement, helping them with paying off their debt early, all these other things that you can get. So it's just one little thing turns into another, turns into another. And so it's like a domino effect. And imagine you're doing this, and every time you do this and you close every 10 clients you talk to, again, you're closing 3 to 5 extra policies. Isn't that incredible? So this is just even in a month, 3 to 5 extra policy a month makes a difference. But imagine you have so many clients at this point that you can do this 2 times a week, 1 time a week, whatever that is. It's just helping you to keep bringing more revenue for yourself and your corporation, and also you're giving more opportunities for your clients to increase their coverage. Okay. Is there any questions for this? Tammy, great question. Do you have to re-ask all the health questions? I typically don't ask all the health questions again because I already got them approved with a certain program, so I have a general idea. I'm just trying to see if their health has changed. So if you wanted to go into a little more detail, you can, but it can seem a little bit of more of a interrogation, right? "Oh, how's your health?" and say, "Oh, do you have cancer? Do you have this? Do you have that?" You see what I'm saying? It could be a little too much. So you could, but maybe then there needs to be a little bit of better transition. Maybe you can say, John and Mary, you said your health is still good. I'd love to see if you can get a better program and a better pricing. Let me just ask you a few questions, and then maybe you can ask those questions, and that might be a better transition. Okay. But typically for me, I didn't because I got them approved a year ago with a certain program. And if their medications or health or they didn't go to hospital for anything, then there's a chance that their health is really the same. Then I wouldn't need to ask them the health questions again.
Sean, can I
Yeah.
clarify too and just ask, like, when you are actually
Okay.
doing the application, you know how it says you have to read it word for word? When you are filling out that new application, what about in that situation?
Yeah, that's a good question. Yeah, thanks for clarifying that. Yes. So in the application question, it is good to ask it, but maybe you don't have to ask it in such a detail. Do you know, like the question asked in the last 10 years, has the proposed insured, you know what I'm saying? That's
Yep.
really too much detail. I might say, hey Cami, I'm just gonna ask you a few questions. It's on the application. So have you had cancer in the last 10 years? Have you had heart attacks, stroke in the last 10 years? Diabetes in the last 10, maybe like that. So that way it's a lot smoother.
Okay. And then I guess that makes me wonder too, when I'm doing these initial
Hmm.
questions for the first time application,
Yeah.
uh, is that a reasonable summary to do as well in the initial application, or am I kind of legally obligated to read it word for word?
Yeah, so that's a great question, Kemi. So, if I were to answer in a very legal way,
Yes,
then asking each question to the T is the best. Okay.
got you.
But if you have to ask, have you ever proposed insured, taken medication for this and that, treated for the last 10 years for every question, it's a lot. So you might say,
Okay,
hey, I'm going to
yeah,
ask some questions. And just to make sure that, you could potentially qualify for this plan, have you had a heart attack, and any heart issues, stroke, cancer of any kind, and maybe just shorten it up a little bit so that it doesn't feel so long-winded.
yeah. Because it's hard sometimes. I reading off
Yeah.
those questions, and the questions, they're kind of hard to even understand what they're saying.
Oh
When
yeah.
you're
Yeah,
reading
for
it word
sure.
for word, it's kind of a mouthful and
Yeah.
they're long run-on sentences.
Yeah. It is. Yeah, it for sure. Sometimes I'm reading it and I mess up a lot because when I try to read the whole thing correctly,
Yeah,
and there's so many medical conditions that is hard to even pronounce,
yeah,
right? So maybe you can just make it a little more simple than what it is. And yeah, that could help you also to get through it
great.
quicker.
Thanks, Sean. I understand.
Yeah, you're welcome. Yeah, you're welcome, Maria. Uh, yeah, so the subject matter expert, the symmetry way is no, actually the SME gets the 60% because they're doing the majority of the work. You're just going to hand the client to the SME. So the correct split in symmetry that is done, the way it is done is 60% to the person that is doing the closing and everything, and the 40% goes to the person that is referring. Does that make sense? So agent who's maybe pretty new and they don't know what they're doing, they wouldn't be even able to help that client with the annuity or anything because they don't have the knowledge yet, right? They didn't go through the class and have the experience yet. So you're just handing them the client and they're taking care of that. So they get the 60% and the person referring gets the 40%. Okay. And at what age are clients not qualified for retirement options? That's a good question, Eileen. I mean, annuities can go up to 85 years old. So it's pretty good. If the client
Really?
has like old 401k, let's just say, or they have some money sitting in a bank account, then yeah, you can roll it over even at up to 85.
Oh, wow, I didn't know that. So it's like everyone's really qualified for that. I
Oh
thought
yeah.
I thought with the power of compound interest, you needed time and obviously if they're
Yeah,
ready.
I mean, yeah. So retirement is like this, or anything like savings too. Earlier you start, the better. Right? But the thing is, maybe you met them when they're already 70, 80 years old, right? You didn't know them when they're 50, 40 years old. So there's nothing you can do there. So what you're doing is you're just trying to help them with best plan that you can help them at the current situation. So if they're, 30, 40, maybe they have a lot more money when they're 80 years old, when they start an annuity plan with you now. Versus if they have a money and they just want to be a safeguarding that because the market has been kind of crazy, up and down, up and down. So maybe they don't want to lose all their money at the age of 70, 80 years old. They don't have time to really recruit. So that's also a great way for them to protect their investment.
Thank you.
Yeah, you're welcome. And my leads that I bought, I haven't continued to call. Can I ask an SME for the person calling them? Yeah, Nora, you can. But SME is the subject matter expert for debt-free life, the IULs and infinite banking, annuities and things like that. So SMEs usually transfer from an agent who already talked to the client. So maybe a better one might be you can ask some agents on the WhatsApp group, Kim Master Agency WhatsApp group, and say, hey, I have some leads that I purchased, but I wasn't able to get a contact with them. If you can give them a call and set some appointments up, we can maybe do a split deal and see if some of the agents want to help you with that. Okay. And I bet there's agents who would love to do that since you purchased the lead, you already made the investment, and they can just help you close it and split the deal. Okay. Yeah, you're welcome, Jericho. Yeah. So any other questions? We'll wrap it up. I think we're on time today, about 45 minutes. Okay. So this is the beauty of the life insurance business. It can be tough. And there were times that especially in the first few years when you're generating the clients, it's tough. But like anything else, for you to get really good at it, you need to work on that skill, right? And this skill is really buying the leads, making the dials, and helping the clients. Look at all the top people that is doing elite producer level production in the past, including myself, right? Stefan Brenes, Bo Hirschfield, and these agents who have done it so much. It's just repetition. I will not have the knowledge I have now if I didn't make hundreds of mistakes in the past. Does that make sense? If I were to put a dollar amount of how much mistakes I made in the past, it will be over $500,000 in my career in the last 8 years. And you're gonna be like, that's a lot of money. But also, I made millions doing this business. So you actually learn from the mistakes you make. If you always are successful, then you'll never learn. Okay. So be the student of the game. It's okay. Every mistake you make, what I do is I just don't want to make that mistake again. That's important. If you keep making the same mistake over and over again, you're not learning. Okay. So make the mistake, learn from it, and don't make it again. And now you're gonna have a much more profitable business. And work on building that. Like I said, first 100 to 200 clients is very, very important. A lot of people don't get there. So if you're already at 100, props to you. If you're at 200, amazing. It only gets better from here. And your commission level should be going up. Your closing ratio should be going up because your skill set is going up. And you get clients back on an annual policy review and close more business, it snowballs. So maybe your first year income was 30,000, 50,000, 100,000, but it could go to 200,000. You know what? Like, I wasn't really good at it when I first started. Stefan wasn't really good at it. Bo wasn't really good at it. Almost quit. Some people almost quit. The top people you see on the stage all the time, they almost quit multiple times. So it's not just you. But do you have the grit? Do you have that perseverance to get through that? That's number one. So I just want to share that with you because Trainings are great, but if you don't apply it, it's useless. So utilize these things. If you've been here for over a year, take the courage to call these clients up, ask them how they're doing, right? Just start there and turn it into a policy review and help them with some other products, and you'll be a blessing to them. It's not just about you. This business is amazing because as more you protect them and bless their family, you get more blessings, and that's the beauty of this business. Okay. So I hope you have a fantastic rest of your week, and I'll see you next time. Take care. Bye bye.